Financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right, everyone. Welcome back to another day in the markets. Hope you're doing well and hope you are staying safe. It's a spooky week out there. I hope you guys have some Halloween plans if you celebrate that wherever you are. I am going to be doing probably the most 30-year-old activity that I could possibly do, and I am thrilled about it. My wife and I are super excited for this year's Halloween. You might call it boring, you might call it super fun, but my wife and I are literally just going over to my sister's house, and we're going to hand out candy to kids, and we're going to make drinks. And to be honest, I'm not even 30. I'm 28 years old. I'm turning 29 this year. At 29 years old, that sounds great to me. We're just going to chill out on the porch. We're going to watch all the kids with their crazy costumes and cycle of life, man. I remember it was all the rave as a kid. Like, what are you dressing up as? I guess it still is. Like, I still want to like pick out something to wear. And I think I'll probably still do some parties later in my life. But this year I was planning on trying to host something at our house. And unfortunately, a bunch of people were not around. So I was like, you know what? We'll just go over to the sister's house, hang out. It'll be good. So Halloween, I'm excited for it. Send me some candy. Man, I used to go crazy on the candy. Sorry, wife. Yes. Married for almost 3 years. Or no, it's been 3 years. Guys, don't send this to my wife. I'm going to get in trouble. Gosh, crazy. 2023. So I got married in 2022, 2023, 2024, 25. Yeah, 3 years. Anyways, markets are up a little bit further here this morning. Not a big move in either direction so far today. But what we can see here is that we have still yet to fill this gap. And I personally, people asked a lot on the Sunday video. They said, this gap, is that gonna fill right away? And I pointed out that gaps do not have to fill in the stock market. Although it is very rare that you get this kind of breakaway move at an all-time high. You usually don't get such a large gap up at all-time highs. This market is just incredibly bullish right now. And it just seems to want to keep going and going and going. I made a comment in my video yesterday just talking about how this year has been a great testimony to why the trend is your friend and why you don't fight it. And somebody, I appreciated this honesty, this vulnerability. They mentioned that this year they had lost $20,000 just fighting trends. And, you know, when I read those kinds of messages, it's painful because I know there's a lot of people, you know, who watch the content and they're like, I've made some huge mistakes in trading. Probably most of us have made mistakes in the stock market, in the futures market, in the Forex market, whatever you trade. A lot of people, almost everyone, has made mistakes in the markets. But unfortunately, some people make bigger, painful financial, monetary mistakes than others. And look, here's the thing. The trend is your friend right now, but it still doesn't even guarantee that if you go long, if you just say, fine, I'm going to obey the trend, I'm going to get long here. It still doesn't mean that you're guaranteed to do well in the markets. Like, there is literally only one thing There's only one thing that truly is your shield in financial markets. One thing. It's your position size. That's it. Traders mess this up every day, all the time. People mess up the position sizing in their trading. Like everyone who's listening, I have got 271 people who have joined into the show right now. If I could give you one thing in your trading journey, if you watch my content for years, if you take one thing to heart, I am telling you as transparently as I can, as clearly as I can say it. I've done this for almost 10 years, spoken to thousands and thousands of traders. Take one bit of learned lessons from me here. And that is, from my experience and in my opinion, the most common mistake people make is around position sizing. Most traders risk too much and don't even think they're risking too much. They think, no, I'm not. I'm risking fine. Really? Test it. Try it. Back test it. Go test your systems, because again, what you think, what I found over doing a lot of back testing in my own trading was the more I back tested, the more I realized my position size needed to be smaller to account for the drawdowns that were inevitable in my system's back tests. Position size, what you think is small today, like, again, some of you are experienced, some of you know this already, but most of you think you trade small enough and do not. Most people who listen and trade the financial markets think they risk okay, but they don't know the importance of risk management yet. They do not know how important sizing down your trades is. Now you might say, well, then I'm not going to make very much money. Yeah, exactly. Exactly. Bingo. You hit it on the head. You got it. You don't make a lot of money trading. Not quickly, not in the short run. If you do this for 10 years, 15 years, 20 years, you get good at it, then you can become phenomenally wealthy. But yeah, if you size up your trades because you're impatient, you're probably going to blow up. 100%. 100% of the time. If you size up your trades because you're impatient, you're going to blow up. Maybe not today, maybe not tomorrow. Maybe you're riding the AI trade and doing really well right now. But the market comes back for its money. If you think you're cheat coding, if you think trading is easy, a wake-up call is coming. Okay? I'm not saying that to be a doomsdayer or to ruin. Like, I'm trying genuinely to do the right thing and tell you to SIBOW and reduce your position size. Gosh dang it. Anyways, yeah, someone will hear this today and someone will say, all right, fine, Nick, I'm gonna go back test. And they'll go do hours and hours of back testing and say, gosh dang it, that guy Nick was right. But most people will ignore what I'm saying, blow up their money, and then they'll learn it the hard way. Don't be that person. I'm telling you, position size, what you think is small is probably not small enough. Are you still long in NAE? I am, and we had some good earnings this morning. NextEra Energy popped a little bit higher earlier, but we've given back a little bit of those gains. Pushed up. Wow, we were up quite a bit. Now up just about 0.5%. But yes, I still own NextEra Energy. I've been trailing stops on this trade for a little while. PayPal, what did PayPal do? Don't tell me it jumped up big time because I'm no longer in the stock. Look at that. That's how the markets will get you, right? So I'm not in PayPal anymore. Would love to see this stock do well though. I really like the company PayPal, and I would love to see this thing start to trade with some more momentum. Would love to see a breakaway move. And then maybe I'll actually trade it long again. What's up, my friend? Is it possible to see historical edge finder data for each asset or currency pair? I'd like to backtest the past scores for backtesting purposes to check how accurate the signals were over time. Yes. So what you can do, and let me also just preface this with, the edge finder is not a timing tool. It doesn't tell you buy at this moment, sell at this moment. But we do have historical scores to use in combination with your own system and strategy. Like even me, I don't use the edge finder like that. I don't say like, oh, Bitcoin's bullish today, I'm going to go buy Bitcoin. I use it as, okay, our factors look bullish. Now I'm going to go line that up with my own style, and I'm going to look for bullish entries. That's how I use it. Now, here's the thing. Why don't I just buy it outright? It's because the tool's not really built around technical analysis heavily. It's built around a lot more on the sentiment and economic data. And we've intentionally done it this way because we don't build the system in idea or like in sequence with one trading style. There are day traders who use the Edge Finder, swing traders, position traders, investors. There are reversal traders. There are currency traders. The tool is a sandbox for data. It's not a timing tool. But with all of that said, you still can look at the historical readings within the Edge Finder if you want to look at them. Simply navigate to the top setups history tab, and you can backtest and look through historical scores to your heart's content. But I just have to preface that the Edge Finder is not a bullish signal. Okay, I'm going long. That's not how the Edge Finder is meant to be used. It is a tool. It is a sandbox to be used in combination with your own style of trading. Because again, people have different styles. Somebody was telling me yesterday, I thought this was really cool. We had somebody yesterday who mentioned that the way they were using the Edge Finder was they were looking at neutral scores and actually trading ranges. And I was like, that's awesome. So when something was getting a range bound kind of signal or a neutral signal, they were looking within their own system for range bound trades. Does anybody else do that? I've never really thought to do that aggressively, but I was thinking about that on the drive into the office today. I was like, maybe what we could do here, this would be kind of cool. Let's grab a neutral reading, for example. So like NZD USD, right? This pair is like exceptionally neutral. So right now the targets go to none because it's not directional, right? But what we could do is potentially make it so that when the bias is neutral, instead of targets here, we get some key support and resistance levels to look for range bound ideas. Something kind of cool. Hi, Nick. The Edge Finder is a real deal. Thanks, Samuel. I hope you're enjoying trying it out. By the way, Edge Finder is free to try right now. James, let's actually, I know we've been sending people to Telegram and we still could do that, but let's actually do this. I want to make sure that everybody who is here right now gets a chance to try it. So I'm just going to directly drop the link to the form. Take 2 seconds. If you want to try the Edge Finder, it is free until Wednesday. So you have today and you have tomorrow to play with the Edge Finder completely for free. No credit card required. Literally just put your email in this form and it will send you a link to the Edge Finder, full access, unlocked until Wednesday. Through Wednesday, I should say. Click this link right here that's been dropped in the live stream chat as we speak. Or if you are not easily able to click on a link, you can alternatively simply scan the QR code that you see on the screen right now below my camera, join our Telegram, and then just hit the pinned message. It will take you to the same spot. But I'm telling you, everybody who is in the stream right now, if you are interested in macro, if you're interested in fundamental analysis, if you're interested in commitment of traders data, if you're interested in all of that stuff, try our tools for free until Wednesday. We rarely do this. So this is your chance to take advantage. We've done a free week all week long, kind of late in the cycle here, but you've got 2 full days to still try out the Edge Finder before that period ends. So there you go. But anyways, I was thinking about that on the way in. I was like, some people use the Edge Finder differently than others. So if you're somebody who's watching Kiwi Dollar, right, and you're saying, well, Edge Finder's got kind of a neutral reading to it, maybe the Edge Finder could help us to identify like, hey, there's a support area around here. There's a resistance area up around here. And maybe we just trade the range. Like that's for someone out there. It seems like there's a lot of people who kind of use those neutral readings. And what this does too is like if you're a gold only trader, a lot of people are gold only traders. You might say, well, if gold is getting a -2, maybe my bias is neutral, meaning if I pull up gold, and let's go to gold, and let's say I'm looking at a 4-hour chart. If I'm looking at a 4-hour chart on gold and Edge Finder is giving me a neutral reading, what's the bias here? Let's just start fresh on this chart. Let's clear it up for a second. And let's do some gold analysis with an Edge Finder reading that's neutral. I realized that although I am a momentum trader, I realize there's a lot of people who trade using the Edge Finder differently than me. And I love that. I love learning from you guys the way you use Edge Finder. We put out a survey, and it was just eye-opening to see the different ways people were responding, like, oh, I use these tools, I look at this, and very cool. What is the upcoming discount? Oh, I can't tell you that. That's a secret. Don't tell anybody about that. What are you doing? Leaking all this information that we got a big sale coming, and don't miss it. It's going to be a spooky low prices. Anyways, let's keep going with this thought process. So if gold is getting a neutral reading on the Edge Finder, and let's say that you're a gold enthusiast, gosh, there's a lot of us. I love trading gold too, but I typically in the past have looked at this and say, well, I'm a momentum trader, so gold getting a neutral reading means I do nothing and I move on with my day and I find something else to trade. But there's also a lot of traders who do not just ignore a neutral reading. This is what I'm finding. We had a couple people comment that they actually use a neutral reading as I'm looking for range bound setups. So if you're looking at, clearly we've had kind of a reversal in this upward trend here on the 4-hour chart. But maybe if you're a range bound trader, you're saying, okay, well, then I'm expecting support areas to bounce and resistance areas also to bounce. So maybe as a range bound trader, you are looking and saying, okay, well, I expect moves to not move too far either direction. So maybe I'm looking to sell rallies and maybe I'm looking to buy dips. Like maybe this is not how I personally trade, but again, Edge Finder. Yes, you did. I noticed your profile picture. Yes. So again, I think it's really cool that people are using the Edge Finder in different ways. So if you have a neutral reading in Edge Finder, some traders are choosing to use that as, okay, then we have potentially some limited directional move in either direction. So maybe a rally in gold is an opportunity to sell, and maybe a fall off in gold prices is an opportunity to buy, and we just trade the range. Good thinking. I mean, that's awesome stuff. Hey, Nick, I'm trying to understand the labor statistics on the AI scanner tab. It says the indices, a weak labor market could imply the Fed is more likely to cut. Why is that bearish for indices then? Andrew, great question. I love the question. Let's take a look at, for example, the NASDAQ. So to your point, jobs market signal is getting a bearish reading, right? Let's just think in isolation for just a second. Not thinking about interest rates, not thinking about the Fed. Let's just think about the jobs market. Is people getting laid off or not getting a job or low hiring? Is that good for corporate earnings? Which is ultimately when we're thinking about the NASDAQ, we want to think with our brain cells here. Is the data suggesting corporate earnings could be strong in the future? At the end of the day, you want to talk about stock market, indices, etc. It's all about earnings. Do companies stand a good chance of earning more if the jobs market is hurting? No. However, to your point, and you said that well, doesn't that mean the Fed's likely to cut? Yes. Yes. But we already have that factored in over here, right? Inflation. We had a good reading in inflation, although interest rates here in the short run seem to be moving higher. We could just pull that up because that kind of countered what I was about to say. Hold on, let's just look. Yeah, so you can see Edge Finder's detected that you've had a short-term start to pick up in interest rates here on the 2-year yield. It uses the 2-year yield trend. But anyways, the bigger picture here is that a negative jobs market is never a good thing for stocks. Now, interest rates being cut is a good thing for stocks. But again, it's not good that the jobs market is hurting, and that means interest rate cuts. Interest rate cuts are sort of just a band-aid on a not good thing for stocks. Does that make sense? You kind of have to look at these things in isolation for them to make the most sense. Can you extend the free period? Unfortunately, no, because we have a special discount starting very soon. And for people who got a chance to try it, I mean, you still got 2 days, 2 full days to explore the tool. I mean, we have all these different tabs. You can go through the institutional data. You can go through the seasonality tools. We did a survey here, and I found that, or I noticed that in the data, a lot of people didn't mark seasonality as a big favorite of theirs. Dang it, I just hit refresh right as that finished loading. Seasonality is one of my favorite favorite tools. It has been one of the most kind of effective things that I've used over the years. Seasonality is part of the reason why I'm very long the NASDAQ and Russell 2000 right now, is because you still have seasonal bias that is very strong for stock market indices. And the cool thing about Edgefinder is it also detects this. So I'm manually checking this, but what's cool is Edgefinder already detected this in its scoring. Take a look at AI Market Scanner. Under technical signals, see how seasonality is getting bullish? The reason this is because it detects seasonally we are going into and during a period currently of strength for the US stock market indices. Does that make sense? Hey, Nick, will you do a FOMC stream tomorrow here or trading battle? The answer is yes, I will be doing both. Tomorrow, we're going to be streaming all the way through the FOMC, and then we're going to be doing a trading battle between Gary and Blake. It's going to be a great time. I'm really looking forward to it. It's going to be a lot of fun. So we'll be streaming both. It's going to be a long stream tomorrow. But yes, long story short, Edgefinder's detecting this stuff here for us, and that's kind of like how, when you're trying it out, again, free to try out right now. Here's the form. Free through Wednesday. All the tools that I'm showing you, completely free to use. Just fill out that link. What I'm showing you here, though, is that the Edgefinder detects that stuff and brings it to your attention. Now, these things are great, but you have to watch a bunch of videos. You have to read a bunch of articles. You have to stay locked into a bunch of content to come to these realizations. I always tell this story, but when I was in Greece last year for my sister's wedding, I had like very little time. We were go. We were doing wedding stuff. I was in the wedding party. It was a lot of fun, but I still traded during that period of time. I'm a trading junkie. So of course I was still watching the markets, but not nearly to the same degree that I usually do in these streams. That's like most of us. Most of us are not, we don't have all day long to watch the markets and to watch the screens and to, read up on what's happening in the markets. During that time, all I used was TradingView and the Edgefinder. And I caught some of the best trades that I've had in a long time. I was long silver during that time. It was a really, really good trade. And I didn't even really watch the headlines. And it showed me the power of Edgefinder. The power of Edgefinder is it simplifies and brings everything to my attention so that I don't have to sit there and watch the news or listen to, CNBC or anything like that to stay up to date. I can literally just have it in front of me. Does the Edgefinder allow switch through different time frames? Yeah, we get this question a lot. Edgefinder does not have a time frame specific. So this very bullish reading, people ask all the time. They say, well, what time frame is that for? And the answer is not a time frame. It is not a very bullish reading on the daily. It's not a very bullish reading on the 15-minute or the 5-minute. It is saying that currently our factors favor bullishness. Use that how you will. It's not saying buy it at these levels right now. Stop it, because it doesn't do that, right? Edgefinder is a directional bias tool. It is not a timing tool. And if this stuff changes, right? If NFP, if CPI, if GDP growth, if these statistics start to change, then the directional bias changes. But that is, again, not a signal to say, okay, I'm long on the 4-hour chart because Edgefinder's, that's not, people use it sometimes like that against our, highly repeated, that's not how you use Edgefinder. The usefulness of Edgefinder is to combine it with your own trading style. It's a confluence tool. It's a sandbox of data, right? It builds a bias, but like I'm long the NASDAQ right now. NASDAQ has been a bullish reading. I mean, let's go look at it. Let's go look at the historical score of Edgefinder on the NASDAQ here for the last few weeks. Where am I going? Okay, I'm going here. I'm going top setups history, and I'm going to look at the NASDAQ. Okay, so if I'm looking at NAS and I'm saying, what has it been saying for a while? You'll see it's been just straight up bullish. Now, this has been the correct side of the market to be bullish, right? So going back to October 1st of this year, we have gotten a strong, persistent, and consistent bullish reading within Edgefinder's score on NASDAQ. So when you're using the Edge Finder, it's not a signal on the 4 hour. It's not a signal on the 1 hour. It's not a put your stop loss here. It's just not what Edge Finder is. It's not built to be that. It is instead check the Edge Finder's readings, use it in combination with your own analysis. So when we look at this, we say October 1st, Edge Finder started getting a bullish reading. October 1st is right here. So at that time, Edge Finder got very strongly bullish on the NASDAQ. You'll see that we moved up for a couple days and we had that huge sell-off on the Trump tweet. Now, did I buy the NASDAQ on this candle because it got a bullish reading in the Edge Finder? No. No. Right? What I did, what I did do is I saw that it got bullish and I said, okay, cool. I'm going to wait for that pullback. And that pullback came, and it came in way faster and way stronger than I thought it would. And I bought that dip. I'm looking at the S&P 500, but same, you can see here's the NASDAQ, right? So I went long the NAS on that drop because I liked the historical levels of support that we found there. We have an overall upward trend, and Edge Finder bias was really strong. So I didn't buy it on the day it got bullish, right? That's, again, not how I use it, not how anyone should use Edge Finder. It is a confluence tool. It is a sandbox of data to help you with your analysis, to keep you locked in on the macro, and to help you lock in on sentiment. That's how you use Edge Finder. Will you be adding to the NAS? Hey, Sluggy, good question. No, probably not. I'm fully positioned. I'm very long on NAS and the S&P, I'm sorry, Russell. I'm also long some individual stocks. So I am fully positioned as much as I'm maximum allocation to the S&P 500, to the stock market, broadly speaking. I'm not going to add any further than that because I don't dabble in leverage. So I know we keep getting this question. We're not going to extend it, unfortunately. We did the full week. We announced it everywhere, published it. To give full transparency, we are also dropping a sale event at the end of the week. Just to let you also know, if you are somebody who has been thinking about getting a copy of the Edge Finder, prepare yourself. We are doing our biggest discount of the year. It's going to be spooky low prices, as they say. Were you a software developer before getting into trading? Yes. I went to school for software engineering, Auburn University, War Eagle. And now I use my software engineering degree in combination with the trading. We got Roll Tide in the building. See, this is just confusing because it looks like I said Roll Tide, but it's actually the producer. The producer holds the power here, okay? So we got to be careful what they say. We're a little bit of a house divided, but that's okay. That's okay. Using Edge Finder was an eye-opener, Nick. Thanks a lot. You're very welcome. Thank you for checking it out. And if you choose to purchase Edge Finder, amazing. If you choose not to, I'd still really appreciate any feedback that you can share with us here at A1. We are constantly trying to build a better tool for our users to improve what it is. Let's take a look at current readings here. We got Bitcoin in the bullish camp. We got S&P 500, Chinese stocks, NASDAQ, Dow Jones, DAX. I mean, look, this is just a risk-on rally. This is just a risk-on signal that continues to hold strength with an Edge Finder. So if I go look at this, first of all, NASDAQ, my gosh. Second of all, S&P, my gosh. Dow Jones, what the heck. UNH is up big today. That's helping out the Dow Jones. You got UNH up it was up 4%, up 3.7% in the pre-market. You got UNH breaking out, looking really good here. And you got gold selling off. People are like, what's going on with gold? Why is it selling off? 2 words: risk on. Trade deals between US and China, rate cuts, corporate earnings strong. It's a risk on rally. Why buy gold when you can buy stocks? That's the mentality of the market. Is that going to be right forever? No. At some point, stocks will get overdone and they'll melt down just like gold did, right? Do we know when that's going to happen? Absolutely not. People who tried to call the top in gold had a tough year. I still believe and have believed anyone who's tried to call the top in the NASDAQ has had just as bad of a year, if not worse. NASDAQ at these levels is still, in my opinion, not a short. It is a buy on the dips, in my personal opinion, not financial advice. I own it. I'm long. My stop is trailed. If we do pull back and fill the gap, come down to this area, that's fine. But I'd take profits on the move if we fail to hold this area. But I continue to say I think the path of least resistance is I think the NASDAQ continues to go higher. I saw a post, and it was a really good post. It was an IQ curve, and it was a joking post, but it had some truth to it, as you know they often do. So it was basically this idea that when you have people who are really smart, really dumb, those ends of the intelligence curve, right? So this is like IQ. I'm just recreating a post that I saw. And this is oversimplified, but it was a meme and it made sense. This concept of, you know, the IQ curve being people who are really on the dumb side are like, stocks go up, so I buy stocks. And then there's people in the middle who are like, this is outrageous. PE ratios are way too high. You know, they're overthinking it. The people who are super bearish on this market, in my opinion, are overthinking it. And then the people who are on this side of it are thinking they're overthinking it. Or in this thing, maybe I'm over here. Maybe I'm just a dummy too. But the point is, people who are doing well in the market right now are either just dumbly chasing, which I think can end really well or really poorly. So please be careful with that. People chasing into leverage, etc. There's also people who are just sort of acknowledging, don't fight the trend. And actually the smartest thing you can do is to not think you're too smart. If you're looking at this rally and you're saying, this is unbelievable, it has to go down, everyone is dumb, everyone is wrong, I'm right, it's going down. If you've been saying that this year, it's been a tough year. It's almost like the smartest thing to do is to dumb it down and just say the chart is moving higher, manage risk, don't leverage, don't be an idiot, but don't fight it. Right? It's almost like by trying to be too smart, historical PE ratios are too high, etc. Now, I'm not saying I'm investing at these levels because I'm actually not. I don't really feel comfortable investing long-term in companies that I love for the long. Like, I'm not doing that right now. I'm trading. Like, I'm very much trading the breakout higher cautiously. But the momentum, the trend is up. What do you think on the DXY? Yeah, let's take a look at it. Also, let me just double check. I think we're supposed to have another stream starting, but I just want to make sure. Maybe not. Okay, maybe not. Yep, just got a message. Mark and James unavailable, just me today. Okay, cool. Well, we'll just go for an extra minute or two here. I want to give me a chance to take a look at the dollar. Look at that NAS ripping here into the morning. So dollar index to me still looks supported. We've broken through this level of resistance at 98.5. Would like to see this thing continue to push through these highs. And I think it has the I think it has the potential to. There is also sort of a geopolitical tailwind in the sense that a lot of deals seem to be being made with the US. Some of that overhang to the market, the dollar, etc. Part of the reason the dollar was down so much this year is the perceived mistrust to the US in all the trade dealings and stuff. So if we're seeing an unwind of those concerns, geopolitically, it would make sense to me that the dollar could continue higher. But even without that geopolitical tailwind, I still think that there's some good spots for the US economy. Of course, we're still in a blackout period due to the government shutdown stuff, etc. But Nick, what about rate cuts? Well, yes, you're right. Good point. But you can't look at the dollar in isolation. I say this frequently in my videos. If you want to trade currencies, you can't look at one at a time. You have to look in combination. remember that the DXY is a comparison to other currencies. And so when we look and we say, well, yeah, the rate cuts are going to get cut in the US, so the dollar has to weaken, right? Well, what are the peers? What are the other countries dealing with? 6.3% unemployment rate, low growth in Europe. The euro looks weaker because the euro or other places, the theme is looking at other places, they too may cut interest rates. If two countries are cutting interest rates, which currency goes down more? The one that is expected to have the weaker economic situation. That's why I think the dollar actually has room to continue higher. It's really important that when you're talking about currencies that you don't just look at the US. If you say, if we lived in a vacuum where it's like, oh, well, the US is cutting interest rates. Well, yes, that is true, but what are its peers doing? They're also cutting interest rates. Upcoming rate cut, stronger gold. Maybe, but gold is like, I think the rate cut story on gold, I mean, I'm with you that is a part of the reason we've had a strong rally in gold, but recently gold's moves, the volatility in gold prices has happened on the idea that, a lot of geopolitical headwinds. So those are bigger moves. So I think the rate cut stuff is kind of a muted, small movements in this, where the big movements are all around geopolitical stuff. Deals being signed, et cetera, causing gold to move lower. But we'll see. I mean, I still think that's a tailwind for gold. Rate cuts are still a good story for gold. But I think that that's more of a floor for gold, not necessarily a reason why it has to go higher from here. Like, I think that offers some support for gold, especially if you start dipping lower. I think there are opportunities to buy that dip, in my personal opinion, at good prices. But I still think we have room to pull back. Like, I made a post on my Twitter or X account yesterday stating that, the big picture here for precious metals bulls, like long term, if you are still bullish on metals, this should actually be celebrated in my personal opinion. I know it's obviously, if you've been bullish, it's been painful if you've been trading it on the shorter time frames, but from a big picture standpoint, this washes out a lot of the froth, a lot of the euphoria that's been in gold prices. Yes, gold prices, like everything else, can get overdone. They can get euphoric. And we said that along the rally, right? I said 1,000 times on my YouTube channel, I'm not willing to call a top, but it would be healthy for a pullback. And we're starting to see that. We're seeing the pullback. And I still think it would be healthy for us to go back and test the 50, test the 100, and maybe, just maybe, even test the 200-day moving average and zoom way out and say, this is still bullish. And this actually gives us a healthy opportunity longer term to buy gold. Now, if you're trading it, that's different. Like, if you're short term trading it, if you're looking at the 1 hour, you're looking at the 4 hour chart, looks like we flipped bearish. Like, we straight up look like we have lost that momentum, double top, failure to hold support, broke down, right? Formed resistance, broke through those lows. I mean, this is bearish structure on the 1 hour. And that can continue for a little while. So again, I go back to where we were earlier in the stream talking about gold. Gold on Edgefinder is getting a neutral reading, which tells me I see limited downside and limited upside. I just don't see gold making huge moves either direction. Maybe we're likely to do something like this, for example. Maybe we come down, test this area, maybe we bounce, maybe we chop around, and maybe we test ultimately that 200-day moving average, and then maybe we bottom out. I know I've just threw out a bunch of opportunities or maybes, but my point is, with Edgefinder confirmation not really being there in either direction, I just see us range bound. Like, we could do this move. We could do this move. We could do this move. I just see limited upside, limited downside. Like, I don't see a very likely scenario where this happens. I don't really see that dynamic very likely. And I also really don't see this dynamic very likely. I think most likely we are range bound in accordance with what the Edgefinder is sort of detecting. Nick, let's be honest, you wouldn't short it even if the edge finder shows bearish. Cedric, you're probably right in the sense that I really am long-term. Like, I really like precious metals as a place to, I mean, I in some of my other portfolios, I am long like silver, but I'm very hesitant to short precious metals. That is true. But if this signal was there, let me give you an example of when I would consider shorting precious metals. If the Fed started hiking rates, if we lost the 200-day moving average, right? If we started retesting the 200-day moving average, treating it as resistance, there could be some short-term short opportunities for me. But to your point, Cedric, you're correct. Very, very rare that I will short gold. I just don't like the trade. It's a difficult one. What did PayPal do? Let's take a look. Yeah, look at PayPal today. Editor just sent me check PayPal. Look at that. My goodness. Beautiful. I like PayPal quite a bit as a company. I think it's underappreciated. Would love to see a breakout here. That'd be awesome. Anyways, I also wanted to make sure, as we mentioned earlier, we have got 2 days remaining. Made a deal with OpenAI. Oh, interesting. That's the thing. Nowadays, you put something in your earnings report or earnings statement about AI, market loves you. Can purchase with PayPal through ChatGPT. Whoa, that's pretty cool. That is very cool. Awesome. PayPal bullish, in my opinion. Okay, so I mentioned this earlier. If you guys want to try out the Edge Finder, there's a good chance to do so between now and Wednesday. So that's tomorrow. You have 2 full days remaining. We did this. I know I've mentioned this a bunch of times, but I just want to make sure everybody who wants a chance to try Edge Finder, this is sort of your last call to get a full 2 days to try it for free. You can do so by clicking and filling out this link. I just dropped it in the chat for us. Don't miss your chance. We do these very, very infrequently and very rarely. If you want a chance to try Edge Finder for 2 full days, no credit card required, no nothing. We're doing a free week access, although we started it 5-6 days ago. So you've got 2 remaining days to take advantage of it. But explore it, because full transparency, we are doing a huge discount in the coming days. So we're trying to make it so that everyone can try it who wants to, and then everybody who has been waiting for a chance to pick up a copy can do so at the lowest price all year long. So stay tuned on that. And with that said, guys, I'm going to go ahead and wrap up the stream here, get on to some other things here for the day. If you enjoyed the stream, make sure to hit the thumbs up button, all the good YouTube stuff, subscribe, and help us out here. Thanks for watching, and we will see you back next time.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.